There are basically three buckets that you have to give some concentrated focus to come tax prep time for your business. Money coming in, otherwise known as revenue, money going out to support the business, otherwise known as expenses, and a subcategory of expenses called money that pays for employees. We call that labor costs. Each of these buckets have special tax needs, and you'll have to treat them all slightly differently. Hi entrepreneurs, I'm Vicky Brown, and you're in the right place if you want to engage your team, boost your business, and grow your leadership muscle. Now, before we even get to the buckets, let's talk about the pre-prep. That's right. Pre-prep should have been going on all year. You should have a bookkeeper, or at the very least, bookkeeping software that's being kept up to date month by month. All money coming in or going out should be logged and classified, and at the end of each month, you should be balancing your bank statement. Not just to know that you know how much money you have in the bank, but also because if you let those statements go by month after month and something has happened, either you made a mistake or the bank did, well, that can come back to bite you really hard later on. So it's absolutely the best practice to balance those statements every month. Now, I'm not even going to address things like making sure you have the right forms and you know the filing deadlines, etc. Why not? Well, because while I know that, of course, you can handle things any way you choose, my strong advice is do not try to do your business taxes yourself. Get an accountant that knows what they're doing. Business taxes can be really complicated, and there can be hidden credits or deductions that only a professional is on top of. Also, for many small businesses, we have a corporate structure that makes taxes even more complicated. For instance, an S-Corp that has pass-through tax treatment. So, no matter if you have a bookkeeper or you are your bookkeeper, do not skimp on getting an accountant. Trust me, you really need one, and they're worth every penny you pay them. Okay, it's time. Gather your records and receipts, and on to the buckets. Let's start with money coming in. I love that part. These are mainly client payments to your company. Oh, there may be a one-off credit here or there for something you purchased, but the vast majority of this bucket is money your clients paid to you, or in some cases, didn't pay to you. You see, you have to not only track the money you received, but also the money you charged, but that was never paid, or was paid late, so you had to charge an additional finance charge. The finance charge situation is really easy. You just have to make sure that you account for that additional charge. But what to do about invoices that didn't get paid at all? Well, that's more complicated. Will they be a write-off, meaning you have your accountant write the amount off as a loss on your books? Sounds like a plan, right? Well, not so fast. There are some important questions that can determine if you even can write off an invoice. Things like, was the invoice recorded on your business books? Was that income reported in your tax return? Is your accounting on an accrual or cash basis? And if you have no idea what the difference is between accrual and cash basis, that's why you need an accountant. I know it's one of the 100 reasons I need an accountant. So, you need to have a talk with, yes, your accountant, about unpaid invoices and see what remedies are available to you. Looking at the money coming in bucket also gives you a great opportunity to review your sales for the past year. Are they up or down? Which products or services sold well and which sold poorly? If your clients are retained or recurring, did they increase the service level? Meaning, did you upsell to them? How many new clients came on board? And alternately, how many left? Are those numbers more or less than they were the year before? You see, looking at the money coming in bucket gives you a valuable partial snapshot of how the business is doing. Now, I say partial because how much you make is only part of the puzzle. The other critical part is how much you keep. And that brings us to the money going out to support the business bucket, also known as business expenses. Now, this is where your chart of accounts comes in handy. A chart of accounts is a list of all the categories you use for income and expenses in your business. For instance, office supplies, rent, technology hardware, utilities. These are all examples of expense categories you'll see on a chart of accounts. Putting every financial transaction in the right place on your chart of accounts ensures that things are properly classified on your taxes. Some categories can be deducted and some can't. A clean chart of accounts helps your accountant easily see which is which. Money going out includes things like payments for tangible goods such as technology and office supplies, and payments for service-related costs like contractors and consultants. Think attorney's fees, accounting fees, marketing fees, and, well, you get the idea. Now here's a pro tip. Most banks will let you define how you want payments to be categorized, and they'll give you a report of how much money you spent in any given category, something like $20,000 on entertainment and $100,000 on rent and utilities. Now, while that may not cover every item that you pay during the year, it does come in handy when you're getting organized for tax time. And finally, there's the sub-business expense category of money that pays for employees bucket. This includes things like salary, payroll taxes, bonuses, the cost of benefits, etc. Oh, by the way, there's an argument for including other overhead expenses like parking, office supplies, and other work-related materials. But for clarity, I just leave those items in the money going out to support the business bucket. Now again, tax prep becomes so much easier when you're working with a good accountant. Generally, they'll send you a checklist at the beginning of the season. It'll help you make sure to gather all the necessary documents and information that they need to complete your taxes. You get them what they need, they do a preliminary tax filing, the two of you discuss any important issues, they file, you pay, and voila, you're done. Sure, I know I slipped the you pay part in there like it was really casual, but what the heck, most years you are going to have to pay, either all at once or quarterly with estimated tax payments. So that's a bitter pill we all have to learn to swallow. So start early, now actually. Grab all your info and get thee to your accountant. And use this time and all this great data to do a focused review of where your business has been, how you grew last year, and what your plans are for the future. Because tax prep isn't all bad. After all, it's information. And information is power. And if you're struggling with how to get your business off the ground and what comes next, check out the Leader's Journey Business Builder. I designed this completely free video series to help you with figuring out who your customer is and where to find her, how to sell without selling, how to package and deliver your service, and much more. Check it out by using the link leadersjourneyexperience.com. And remember, your inspired leadership is the secret sauce to having a high-performance team and a wildly successful business you'll love. I'll see you next time on Leader's Journey.